Welcome everybody to this sunny afternoon at the premises of the Austrian Central Bank. I just looked to the back row, technically everything okay. My name is Birgit Niesner, I'm the director of the Economics Analysis Department of the Austrian Central Bank, and I have the pleasure to welcoming you to a rich session. We have 1 hour and a half on a paper which is an IMF staff note on a very timely issue. And we have 2 discussants who will challenge the author. One discussant is sitting in Bologna, if I'm right. I start maybe with the first discussant because you can already see the other 2 persons. Michael Plummer is online. He dials in from the Bologna Institute of the Johns Hopkins University. He's the first discussant, and he's an expert on trade agreements. So talking about deglobalization, he will give his comments from this perspective. My second discussant is Susanne Weigelen-Schwierzig. She has not an economist background. She is a sinologist, you say in English, yeah? So she is an academic person and will give us an insight on cooperation schemes which exist in Asia, which we maybe don't have so much on the radar. And now coming to the main speaker, I welcome Shekhar Iyer on my left side. He started his career at the Bank of England, but he has since then run a long-standing career at the International Monetary Fund. And of course, the paper has a lot to do also with the role of the IMF. He is on maybe not a world tour, but on a Europe tour to promote the ideas of the paper, which, as I've understood, is of course teamwork. And it is something which is, I think, on the mind of everybody. And now in January, there was a very nice Economist edition on the zero-sum game of deglobalization. And I just would like to quote one sentence which puts it in a nutshell. Mutual benefit is out and national gain is in. So we are living in a world of egocentric countries pursuing their own national interests, and what kind of world this might lead to and what we could do against this scenario, we will hear from Shekhar. Thank you for coming. The floor is yours.
Thank you very much, Birgit, and thanks to the Austrian Central Bank for inviting me here. Great pleasure to be here. So, by the way, how do I?
Can we? The remote control is over there.
So, the name of this paper is Geoeconomic Fragmentation and the Future of Multilateralism. And as you can see, there's about 100 authors who have collaborated on this paper from our research department and our strategy, policy, and review department. So what does the note do? Well, first, we propose a working definition of geoeconomic fragmentation, abbreviated to GEF, highlighting what it includes and what it doesn't. We provide some early evidence of signs of GEF. We discuss the transmission channels through which GEF might impact the global economy and look at some recent quantitative estimates of that impact. We discuss the implications for the international monetary system. And then finally, we lay out what we call a pragmatic approach, which might preserve the benefits of globalization and multilateralism amid the developments that we are seeing today. So, economic integration has been slowing since about the global financial crisis. So if you look at the left-hand side chart, it shows that flows of goods, services, and finance, cross-border flows, which were increasing very rapidly after World War II, basically seem to have plateaued after the global financial crisis, especially for goods and finance. Services are still growing, but from a small base. At the same time, if you look at the number of trade restrictions that countries are imposing upon each other, there's been an exponential rise in recent times. So in 2022, the number of trade restrictions imposed was greater by a factor of 7 compared to 1 decade ago in 2012. So all of this has also coincided with a general concern in policy and political circles about national security. So at the IMF, we have these annual reports on countries' exchange rate arrangements called RER reports. And if you look at the mentions of national security in these reports, you can see that they've been growing very, very rapidly. And moreover, this predated the current war in Ukraine, although no doubt it has increased even more as a result of that. At the same time, if you look at the private sector, and the chart is a text mining exercise where we go into the data and we look at what companies have been saying in corporate presentations. And if you look at the frequency with which they use words like reshoring, onshoring, or nearshoring, it has gone up from basically nothing about 5 years ago to being an extremely dominant concern. So clearly in the private sector, influenced by the kind of geopolitical backdrop, there's been a great worry about global supply chains. So all of this leads us to a working definition of geoeconomic fragmentation, which we define as a policy-driven reversal of global economic integration, often guided by strategic considerations such as national security, sovereignty, and autonomy. So I should mention that we explicitly do not want to include reversals which are due to autonomous changes. For example, think of shifts in preferences. You could think of preferences changing away from goods towards services. Well, goods tend to be tradable, services tend to not be tradable. So that kind of change in preferences would lead to a fall in global flows of trade, but we would not call that geoeconomic fragmentation because it's arising from a different source. Similarly, we do not want to include policies that are motivated mainly by prudential concerns. So in the wake of the global financial crisis, a lot of countries woke up to the fact that you need robust macroprudential policies to guard against the fickle nature of certain types of capital flows. We would not want to include that in our policy-driven reversal. Okay, so how do we expect the economic consequences of GEF to be transmitted? The obvious place to look is to look at the many decades of greater global integration that we had after World War II and look at all the channels through which those impacts and benefits were transmitted. Most obviously, trade, technology diffusion, migration, capital flows. And then in addition to that, a couple of perhaps more recent concerns to do with global public goods. And then I'm also going to say something about uncertainty. So the first and most obvious and most dominant channel, obviously, is trade. So if you look at the note, we compile ample evidence from the literature on the benefits that have been provided by the enormous expansion of trade in the post-war era. I'll just mention three main ones. First, as the chart shows, there is a strong positive link between trade and GDP growth. So international trade has acted as a powerful vehicle of income convergence, catch-up between low-income countries and advanced countries. Secondly, and relatedly, there is also a strong link between trade and poverty reduction. So global poverty has declined by an unprecedented amount over the last few decades, and this is at least associated with trade. There's lots of literature which attempts to sort of identify causality, and I think it's fair to say that the balance of that literature suggests that there is a causal connection between trade and poverty reduction. Third, what about advanced economies? Well, in advanced economies, international trade has led to lower consumer prices, which is something that has disproportionately benefited low-income consumers, the kind of people who shop at Walmart. So these three extremely important long-run benefits from trade all stand at risk as a result of GEF. More recently, we have empirical evidence from the kind of frictions that have been going on, for example, with the US-China trade disputes. And although the literature there is scant compared to the previous literature I was talking about, what evidence we do have suggests that when tariffs, for example, were put in place to help out certain industries, the evidence suggests that they wound up raising prices for consumers and for importers, while imposing costs on growth, especially export growth and employment. So this is in line with suggesting that in the future also, such protectionism would tend to have unintended consequences and raise prices and reduce efficiency. Looking ahead, we have some model-based estimates, but I will reserve that for a little bit later in the presentation. The second channel is technological fragmentation. And of course, there are no lack of examples. I'm sure we're going to hear from some of the discussants as well. There is this move to try to make sure that technology can no longer be transmitted as freely as it has been in the past. Now, when we look at the past few decades, technology diffusion has been a very important source of knowledge transfers and improved productivity in countries that are not at the technological frontier. There is evidence that it's improved technology adoption, it's increased the skill base of the workforce, and it's created innovation spillovers, notably in the area of mitigating climate change, where often domestic innovations on green technology in low-income countries can diffuse as a result of technological transfers from the frontier. Again, all of this would be put at risk with GEF, and the more recent data that we have in the era where these frictions have already been there suggests that indeed fragmentation has created costs through market distortions from strategic subsidies. The evidence suggests that these strategic subsidies are negatively associated with firm productivity and have created excess capacity in some sectors. So again, looking ahead, extrapolating from what's happened in the past, technological decoupling could result in less innovation, reduced productivity spillovers, and at least in the short to medium run, during the adjustment period, it could also lead to supply shortages and higher prices. Let's turn to movements of labor across borders. I mean, this is something that's always been controversial, especially in advanced economies, but especially so now because of the kind of geopolitical backdrop that we have. Again, the evidence suggests that barriers to migration could reduce knowledge diffusion and risk sharing. Often, people who come as migrants are an important conduit for transmitting ideas and technology across borders in both directions. As we all know, remittances can be a very important source of income in low-income countries, and in particular, they can also act as a macroeconomic stabilizer because remittances tend not to be correlated with the local business cycle. And so all of that would be put at risk. Capital flows. Now, perhaps one should distinguish between different types of capital flows. At least the stable types of capital flows, like foreign direct investment, the evidence suggests that they've been very important in terms of diffusing technology, creating firm-to-firm links through global value chains, and improving the knowledge base and the productivity of local firms. They've also led to a deepening of financial markets in many countries. So all those benefits, again, would be put at risk. And there would be capital misallocation as well associated with such fragmentation. A couple of additional points. First, I think it's fair to say that the concern about climate change has never been more urgent than it is now. And clearly, climate change is one of those global public goods which cannot be provided without multilateral effort. So Raghu Rajan, who used to be the chief economist of the IMF, recently gave a public lecture in Washington, D.C., where he was talking about how difficult it is to imagine that countries will be hostile and separate into blocks and fight with each other about everything, but then miraculously cooperate on climate change. It seems difficult to imagine that kind of thing happening. So again, this important global public good could be put at risk. Another one, which we've all been living through for the past 3 years, is pandemic preparedness. This is, again, something that needs to be done at a global level. Unless everybody in the world is vaccinated, the risk of something coming up and transmitting all over the world again will be ever present. So there are these important areas where multilateralism is absolutely crucial, and GEF puts that at risk. Finally, let me mention uncertainty. Nobody really knows what the steady state of global economic fragmentation is going to look like. Everybody can make guesses, but there is a great deal of perhaps what I might term as Knightian uncertainty about the final steady state of GEF. And that uncertainty itself, the literature shows, can exercise an important negative impact on growth and productivity. This can happen through firms, which delay crucial investment decisions. It can happen through households, which increase their precautionary savings and reduce growth in that way. So those are the channels. Perhaps they are not comprehensive, but even the channels that I've laid out, I think, are fairly worrisome. Now, the study of geoeconomic fragmentation is in its infancy, the quantitative study, because it's a relatively new phenomenon. In our paper, we review 4 recent contributions to the literature. And I should kind of give you a health warning before going into the details. Every single study makes different assumptions about what is meant by fragmentation. They have different types of blocks that they imagine in the study. They differ in terms of whether you have non-aligned countries or whether every country is supposed to join in a block. They make different assumptions about the elasticity of substitution between suppliers. So the studies are really apples and oranges. So you cannot compare the quantitative estimates to each other in a strict way. That said, there are some common themes that emerge. And let me just mention a few of them. First, the deeper the fragmentation, the larger the estimated losses. This might seem like an obvious point, but let me put it in the following terms. There are studies in which you have non-aligned countries. You have 2 blocks, let's say the US bloc and the China bloc, and then you have a bunch of non-aligned countries which are allowed to trade with either of them. Sometimes, under some scenarios, you find that the non-aligned countries can actually benefit from trade diversion. However, if you have a deeper fragmentation in which all the non-aligned countries are forced into one block or the other, then in fact, the output losses are much greater. So in that sense, the deeper the fragmentation, the greater the output losses. Secondly, those studies that also look at technological decoupling on top of trade fragmentation find bigger GDP loss estimates. In the particular diagram that you're looking at, those are the 2 studies on the right with higher estimates for losses compared to the 2 studies on the left. Third, the estimates vary very widely across countries, and emerging markets and low-income countries generally stand to lose more than advanced economies. This is a fairly obvious point because they are further away from the technology frontier. So if technological diffusion and the free flow of ideas across borders is halted, then these countries stand to lose disproportionately more. And then finally, short-term elasticities of substitution are likely to be smaller than long-run elasticities, which is just a fancy way of saying that it takes a long time to reconfigure a global supply chain. So you may be able to do it in the long run, but in the short run, it's extremely difficult and extremely costly. All the numbers that you see in this histogram are long-run estimates. The short-run costs could be even greater because of that transition. I should also say that all these studies are looking at one or at most 2 channels, that is trade and technology. None of these studies is looking at migration. None of these studies is looking at capital flows, uncertainty, global public goods. So these numbers, large as they may be, are very far from being an upper bound on the kind of cost that we might find for the global economy. Okay, let me turn now to the international monetary system. What do we mean by the IMS? We think of the IMS as having 4 pillars. The first is that it should have an efficient and robust plumbing. That is the global payment system for transactions across borders, which can be made safely and efficiently. Second, there should be a stable global reserve currency configuration. I'll come back to that in a minute. There should be robust mechanisms for preventing crises, and when they occur, to mitigate them and to resolve them. And then finally, one should have a robust global financial safety net. These are, the stylized pillars of what we call the international monetary system. And of course, each of them, in different ways, is going to be affected by GEF. The key risks. First, financial globalization is likely to be replaced by financial regionalization, where the risks and benefits of cross-border capital flows migrate from being international to being within bloc. This could, lead obviously to a more fragmented international payment system. We are already seeing that in many respects. Some countries might have greater incentives to create new and parallel payment systems, perhaps to avoid sanctions or to avoid confiscation of reserve assets. More generally, even on the demand side, if you get trade fragmentation, then it's likely that there will be a greater demand for fragmented within bloc payment systems. And there is a question about whether those payment systems will have interoperability, and there would obviously be efficiency losses and higher financial costs associated with that as well. What about crises? Well, it's okay. So I know that the bullet point says more severe crises. I'm not sure about that because, of course, you could have an autarky where there are no international crises at all because you don't trade with anyone and you don't get any capital flows. But of course, the efficiency losses there would be so great that even the non-crisis times seem like a walk in the park compared to a more integrated system. But regardless of whether the crises become more severe or more frequent, I think what we can say with some confidence is that they will be more challenging to resolve. Firstly, because the regional bloc will have fewer financial resources than the global system. And secondly, because creditors, at least in the transition, are likely to be very fragmented. If you look at the pie charts here, there's a comparison of creditors for low-income countries in 1996 and 2020. The yellow bit is Paris Club, which is the official creditors, the official bilateral creditors. That is the traditional vehicle through which, debt restructuring has taken place. And because the Paris Club has been around for a long time, it's all sort of government to government, it's relatively easy to get people around the table and agree on mechanisms to do the debt restructuring. Now, the Paris Club segment has shrunk to 12%. There's a much wider variety of both private sector as well as government actors. And, so already it is more difficult to come up with debt restructuring and debt resolution. In a fragmented world, obviously, that would pose even greater challenges. There could also be abrupt shifts in FX reserves configuration and a weaker and more fragmented GFSN, which I will come to in my next couple of slides. This slide shows the current structure of international currency configurations. It'll be no surprise to anyone that the dollar is the dominant currency, which arguably it's been since the Bretton Woods era. If you look at the left-hand side chart, it is by far the dominant currency for most categories of international transactions, with the exception of SWIFT, where the euro is almost at par with the dollar. This may change because of geoeconomic fragmentation. Arguably, that's no bad thing. In a multipolar world, why shouldn't we have multiple sources of currency? And all that is true. But in the transition, there could be a lot of instability. There could be losses of stores of value. And I think we are, it's early days yet, but there are some signs. If you see on the right-hand side, there has been a recent sharp increase in central bank holdings of gold. That's the blue histograms. And if you look at the yellow line in the middle, that shows Chinese holdings of US treasuries. And you can see that recently there's been a substantial drop in those Chinese holdings of US treasuries. So these are straws in the wind. This chart shows the current composition or layers of what we call the global financial safety net. The red line shows central bank currency reserves, which are still dominant. In terms of risk sharing, we have regional financial arrangements and bilateral swap lines between central banks. These have been growing in importance. There's also the IMF, which is the layer at the bottom. The IMF is the only truly international layer of the GFSN. Now, the danger is that with GEF, there would be greater self-insurance at the country level. This would be costly compared to international arrangements, and it could engender greater crises over time. There is also the danger, and I say this as somebody on the staff of the IMF, that international institutions will stand to lose credibility as a result of GEF. If they are seen to be dominated in terms of shareholding by a particular bloc, then it is quite possible that members of other blocs will not view these international institutions as an honest arbiter and an honest broker. On the other hand, if you have very balanced representation from all the blocs, there is the converse risk of paralysis and an inability to agree on any course of action at all. So GEF does not look good, for international multilateral institutions on many levels. Okay, so let's go to the future of multilateralism. This is very blue sky thinking. So, this is more a bunch of ideas that we've put down on paper for discussion, rather than something that we think is particularly strong. So it's clear that many countries in the world, because of geopolitical tensions, are going to have a lot of problems aligning on various issues. So what we suggest is let's at least demarcate those issues where globally coordinated action is absolutely essential and perhaps feasible because preferences are aligned. I've already mentioned two examples of that, which are climate change and pandemic preparedness. So on issues like that, it is essential to have multilateral, open, and inclusive engagement. The second pillar is issues where preferences are not aligned and globally coordinated action is more difficult. Here, we can see plurilateral initiatives, provided that the plurilateral initiatives have safeguards. So, we're thinking of fewer countries getting together and choosing to do less, but hopefully doing it in an open and non-discriminatory way, leaving the door open for other countries to join in future. And I'll go through some examples of that in a minute. And then the third is unilateral actions. These are obviously to be avoided wherever possible, but if they have to be done, then we would suggest that there should be consultations and guardrails to minimize systemic damage, especially to innocent bystanders. So let me take a couple of, so the first example of this three-pillar approach is strengthening the global trade system. Now, recently at the WTO in July, there was a package agreed which we think nicely illustrates the power of multilateral engagement. There was an agreement on issues like fisheries and on intellectual property exemptions for COVID-19 vaccines. So those are examples where all the countries in the world got together, had multilateral engagement, and went forward. The second is plurilateral engagements. Here, there are a number of plurilateral agreements which have been taking place at the WTO among select groups of countries. These typically have safeguards built in so that they try to avoid discriminating against other countries as far as possible. And often they tackle deep behind the border trade distortions, industrial subsidies, green technologies, things like that. Third, unilateral actions. We would urge that there be a consultation framework on issues like subsidies and safeguards like safe corridors for food and medicine, as we saw recently during the Ukraine war with food and with COVID-19 for medicine. I won't go through this in detail, but similarly, you can take a three-pillar approach to the international monetary system. On the multilateral side, you could consider a global platform to foster consensus on debt restructuring, which is an urgent need in many, many countries in the world today. On the plurilateral engagement side, we could think of cross-border payment systems, which are being developed. If there was plurilateral engagement, then at least we could have interoperability between those different systems, even if they were developed by groups of countries. And third, we could consider guardrails in the design of these cross-border payment systems to make sure that innocent bystanders are not harmed. And then finally, this slide suggests that the IMF could have a couple of important roles in this process. First, through our surveillance and analytics, we could try to examine spillovers when there are plurilateral engagements or unilateral actions, and try to bring to our membership an analysis of perhaps the unintended consequences of those actions. And secondly, we could have a convening role to bring countries together to discuss issues of common interest and to develop common approaches. But in order to do this, the fund must remain representative of its global membership. It must be viewed as even-handed and impartial, and it must, of course, be adequately resourced. Let me stop there. Thank you very much.
Thank you very much, Shekhar. You walked us clearly through the different layers of geoeconomic fragmentation. It is very costly, does not affect everybody in an equal manner. And especially this approach is a nice differentiation between multilateral, plurilateral, and unilateral, which is, of course, the least preferable. Let's see what is now the reaction of the two discussants. Michael, may I call upon you, and the floor is yours.
Okay, thanks very much. I very much enjoyed reading this paper, which I'd actually seen earlier, and it is, addresses a topic that is extremely relevant. And, as mentioned, despite progress, all the progress cited in the paper about globalization, including in Asia alone, over 1 billion people brought out of poverty, the global financial crisis seemed to mark what was a peak in globalization, after which things seem to be stalling. Now, there's a lot of reasons for this. The IMF has done work on it, including things that are a bit more innocuous, like maturing of supply chains. And, with the data, there's a lot of double counting when we have with these supply chains. So when you've got a slowdown in the growth of supply chains, it sort of becomes magnified. But I think the paper makes it very clear that policy trends, some may be related to the global financial crisis, others that were orthogonal, have contributed to this slowdown, which is sometimes called globalization in global economic integration. And I think this paper does an excellent job of explaining these trends and why stagnation or the reversal of globalization is problematic, how emerging markets and low-income economies are especially exposed, and also underscores the importance that the global marketplace is at risk when we have such pressing matters in global public goods like climate change, et cetera. And it offers some thoughtful way forward, and maybe blue sky thinking, but I think it's based on sound logic. And even though politically there may be obstacles, it's useful to know which direction that we want to go in. So I really enjoyed the paper a lot. I used to be the editor-in-chief of the Journal of Asian Economics, so I'm used to being very picky and critical of papers, and there's very little to be critical of in this paper. But I'll make a few comments on it, and also add some recent work that I've done with my co-author on looking at some of these issues, because as was mentioned, there's not a lot of literature yet on this topic. So a few papers on the study. As I mentioned, it's impressive in its survey of the global geoeconomic fragmentation and looking at trade, capital flows, and immigration and migration. And I think it's to the credit of the paper that it includes all of these variables that we need to focus on in terms of when we look at globalization. Because someone like myself that works more on trade, we don't talk as much about capital flows or migration. As a matter of fact, the model I'll talk about in a moment, our macro closure excludes these things. But it's very important to take them into account. It underscores how anti-globalization and policy conflict can undermine these global goals that we have on poverty reduction, as well as true inclusion. In other words, not looking at inclusion as being something that's based on a region or a country or even a hemisphere. It's sort of looking at things globally. And this sort of conflict will slow efforts to fight climate change and pandemics, and I think that was very clearly presented just now. And also affects other diplomatic variables and non-economic goals. I don't want to go into those. It's not the goal of this panel, but I think it is a bit naive to think that what's going on in the economic realm doesn't have important bearing on what's going on in other areas. If I may say, for example, when the United States pulled out of the Trans-Pacific Partnership Agreement, mostly in Asia, people were very concerned, not so much with the foregone economic benefits of that agreement, which would have been significant, but more importantly, it was related to the effect on U.S. engagement in the region, strategic interests, and these sorts of things. The need to have more balance in the region, and so separating the economics from those non-economic goals is problematic, really, when we're looking at these multidisciplinary problems. It makes a strong case for cooperation. I'm going to argue in a moment that it would be useful to go beyond just non-discriminatory multilaterals. I think that certainly in the WTO context, the plurilaterals are useful, but I think also economic cooperation at a regional level can be useful as well. Leadership has become a major problem in the global system, and this is mentioned in the paper. It's not just the U.S.-China conflict. It's also, for example, the U.S. use of the Section 232, which has to do with national security at the WTO, which is it can be a very big problem. And, its approach to the WTO without an appellate body is becoming problematic. So what used to be the most important leader of this multilateral system seems to be on the sidelines a bit. Also, the UK has given a lot of useful input over the years, and we've got the Brexit phenomenon. And then we have to ask ourselves the question, China, which has increased its share of the global economy at such a rapid rate, is it playing the region leadership role it needs to, or is the EU playing the role that it needs to, given the fact that there's, what used to be a system led by the United States, that's running up against some obstacles. So, anyway, I think that we have a lot of these problems, and I'll argue in a moment that mega regionalism in Asia, in particular, is playing a bigger role. So you are seeing some leadership in Asia. Briefly, a few more specific comments. Just one point on foreign direct investment. It's really is an important variable, and I believe it's noted in the paper that FDI flows have been fairly flat since the global financial crisis, when they had been booming before it. But interestingly, if you look at what's going on in stocks, things are changing in a very different way. Globally, according to the World Investment Report, globally, the stock of foreign direct investment in 2009, so right after the crisis, was $18 trillion. And by 2021, it rose to $45 trillion. That's a 150% increase compared to a 59% rise in global GDP. So the question is, that's one aspect of globalization that seems to be very interesting. Are we seeing a different type of globalization from these rising stocks? In other words, it's taking place behind the borders already, rather than being fed by cross-border FDI flows. I think it's important to look at, the unequal benefits to labor, which are mentioned in the paper, not just on an intra-country level, but also cross-country, which is important. Often we hear in our developed countries that trade can negatively affect the return to labor, and that's often blamed. But what about labor globally? When we do the analysis there, what does the analysis tell us? It's very different. I think this plays into this problem of the popular narrative on trade in the literature, which tends to be very negative. Okay, so in any event, I think it's an excellent study. There's a few comments. I did want to mention this, our empirical work that we've been doing on in this area on global economic fragmentation cooperation in the terminology of the paper. what we were doing with this is we were looking at both these trends towards greater fragmentation, but also trends towards the opening of markets that we see in the Asia Pacific. We call it geopolitical restructuring because, as was mentioned, geoeconomic fragmentation sort of suggests that it's coming from the economy, yet it's driven by policy. And so we chose the term geopolitical restructuring or fragmentation because of that focus on policy. On policy. So we've got that on the one hand, and we've got economic cooperation on the other. And in terms of, we're using one of these computable general equilibrium models. As mentioned, these things can vary quite a bit, even though we're using an adaptation of the Becker's WTO model. And what we try to do is look at the effects on income, on trade, on labor, and especially on global value chains. And if you look at, just give you summary what goes on, it's pretty much effects on income. The estimates would be mid-range from what were surveyed in the paper. But in answer to the economists, mutual benefit is out and natural gain is in. Most of these models will say that there is no national gain. In other words, it's not zero sum. Some of the countries that are engaging in this geopolitical fragmentation actually lose. As a matter of fact, the vast majority of them did. Okay, and that's on one hand. The other hand, we look at what economic cooperation can do. As many of you know, as of July of last year, the Regional Comprehensive Economic Partnership took place. That's 15 countries in East Asia. The Comprehensive and Progressive Trans-Pacific Partnership has been in place since December of 2018. The two final big countries ratified at the end of last year, and they're studying enlargements. So you have the UK enlargement is being assessed, and China will be assessed as well. So you have several countries that are planning on joining, and we've got two enlargements here. One when the UK joins with South Korea, and then a second enlargement where Indonesia, Thailand, and the Philippines joins. These regional countries in ASEAN join. And then finally, we have an estimate of what we call a global reach. This is kind of a globalization benchmark. And if we're looking at blue skies thinking, the idea here is, okay, what if you had a much more major agreement? What if you had not only China joining the CPTPP, but you had the United States, you had the European Union, you had Taiwan on the one hand, and then we have India that would join RCEP. So this isn't necessarily certainly not in the medium term politically viable thing, but just to give us a benchmark at where things could go. And just to give you a view, and I'll go through this quickly because I know I'm out of time. First of all, it's interesting to point out what's happening in the world economy. This would be consistent, I think, with the analysis of this paper, is that if you look at these groupings, and the red here, we've got GDP, blue is population, and red is the trade share. And this look is changes over a 2021 to 35 period. You see very clearly that from a GDP point of view, these Asian countries are having a much bigger share, and NATO countries, or the OECD, if you might say, are having a big drop. Having said that, it is still true that by 2035, the OECD countries continue to constitute a slight majority of the global economy. So, from a method of moments, you see the levels. The rate of change is against what's going on in the OECD, but the levels will still be relatively high. Now, in terms of these geopolitical fragmentation scenarios, we've got three we look at. One is reshoring, where you've got these 6 different blocks that sort of put up barriers. One is nearshoring, where you group together with a region and then you erect barriers on other groups. And one is friendshoring, which was something proposed by Janet Yellen in 2021, where you have these different blocks where you trade with your friends and the others are excluded. And I thought it was interesting. With the friendshoring, we've got a US-led group, which includes Europe, et cetera, and Japan. Then there's a China-led group, which doesn't include a lot of countries. And then we have neutral countries. But as neutral countries, we assume that they will be slightly discriminated against. So when we raise barriers on trade between the blocs, we have half the barriers that go on with the neutral countries. And if you look at this, you get negative effects on income essentially across the board, which would be considered consistent with the literature. There are very few exceptions. There's a very, very small increase in income in the case of the United States, for example, with reshoring, but it's like 0.002% of GDP. And it has a negative effect on these other fragmentation scenarios. So this is very consistent with what the paper was saying. I didn't see the trade effects in summarized in the paper, but if you look at the trade effects, they're 2 to 3 times worse than the income effect, which often happens with these models. And so you see trade really getting clobbered. Like if you're an open region like ASEAN, small, open economies that have been liberal and trying to engage in the international economy, a policy that we economists, the IMF, World Bank, everybody's been supporting, you see that in these scenarios, a region like ASEAN gets hit badly, like 17.5% contraction in exports on a permanent basis. So when we talk about these scenarios, we have to look at the general equilibrium effects. And I think this is something that the paper does. This sort of adds a bit to the literature on it. And I think that this is just starting, but it'll be interesting to see where the literature goes. In terms of cooperation, very briefly, we see that very positive effects that you get from cooperation. The biggest line there, that brown line, has to do with that futuristic, if you will, global reach scenario, which is very big increases in real income for a group like ASEAN. From the other scenarios, a bit less, but impressive. But I think it's important to underscore that we can't think, even though this greater cooperation, this regional cooperation can compensate in part for what's going on with geopolitical fragmentation, it is only part of it. Closing off the global economy is going to be, on the whole, very negative for these countries. And the same is true for exports. As I mentioned, usually exports 2 to 3 times what income effects would be. So they're very positive with cooperation. And just as a last point, with respect to the effects on global value chains, in these two charts you see on the left, the effects of deglobalization on, say, China, the United States, Vietnam, which is a very open country, and the world. You see the effects on GVC participation is, sure, it hits China very badly, but it hits the United States as well. In fact, global value chain participation falls by more for the United States than it does even for China. The world gets hit badly. And in terms of cooperation, you see generally positive effects. You see under some of the CPTPP enlargements, you see the United States, for example, is negatively affected. That's because it's not part of the region and it suffers from trade diversion. But when you include it in general cooperation, it's positive. So in effect, this additional piece of literature kind of confirms a lot of things that went in that were articulated in the paper. So I'll just stop there.
Thank you very much, Michael. Thank you for, it's always difficult to do online moderation, but thank you. I hope you heard the applause. Thanks for coining another term about the same problem, geopolitical restructuring. And with your words that Asia is on the rise, I would like to hand directly over to Susanne, the second discussant.
Yeah, thank you very much for giving me the opportunity to cast a few comments on this very, very interesting paper published by the IMF, and also on what my pre-speaker just said about the situation. I would like to draw your attention to the fact that I'm not an economist, and that I have a training in political science and in contemporary history, and my focus has been on China for 50 years. And so I'm going to talk about the elephant in the room. And the elephant in the room is not only the fact that what we have been listening to up to now is not an economy-induced fragmentation, but it's a policy-induced fragmentation. So I'm going to talk about geopolitics. But the elephant of the elephants, or the elephant among the elephants in this room, is of course China. And maybe this is the reason why I was invited to come here and give a few comments. I can very well understand that the IMF not really wants to talk about the elephant in the room, but maybe for us to understand why we need to talk about the geoeconomic fragmentation. The reason why we have to talk about this is because there is a geopolitical fragmentation, restructuring going on in this world. And China is at the very center of this. And China is not only at the very center of this because it is a big country with the second largest economy in the world, but because it's a country that is maybe at the very forefront of resisting against this geoeconomic fragmentation. Because as we just heard, China has been benefiting enormously from globalization. And of course, China is very much afraid of losing this momentum in a situation when the internal economic development in China is not so positive as Mr. Xi Jinping had anticipated a while ago during the 20th Party Congress. So my first argument would be, if China is the actor among all our international actors to resist against geoeconomic fragmentation. So why is this so? And I think from my perspective, we need to understand that the reason why China is resisting against this is not only because China needs the world, but also because we need China. And just let me give you a little bit of an historical perspective on this. If we look at the Cold War in the 1950s, maybe you can remember, or maybe you know, that during the 1950s, China was closely aligned with the Soviet Union. And this was one of the reasons why, during the 1950s, the Cold War didn't turn hot. Because despite the fact that the United States at the time was militarily in a much better position than the Soviet Union, it was not in a position to go to war against Russia and China. So while we look at the Cold War as a binary setting, we really have to understand that this binary setting worked for a very long time because there was a hidden third actor. And this hidden third actor is China. And just remember how weak China was at the time and how isolated China was at the time, seemingly. I mean, if you look at newspapers in the West, nobody would say anything about China. It was by the Korean War and China's participation in the Korean War that suddenly China was on the world stage again. But I don't want to go too much into detail, but I think, if we sort of try to understand the Cold War, not only as a binary setting, but as a setting that has a third hidden actor, and that this hidden actor actually was enormously important to prevent hot wars from emerging, maybe we can also understand that the beginning of the end of the Cold War was actually also closely related to China. In 1971, the People's Republic of China was admitted to the United Nations. And this was part and parcel of a repositioning of the People's Republic of China in the international order. If we look at this incident from 1971 in a long-term perspective, 20 years later, the Soviet Union fell into pieces. The beginning of this process, and this implies the beginning of the end of the Cold War, is the rapprochement between China and the US, which started in 1971 and had its final really important outcome in 1991. Very interestingly, when you listen to Mr. Kissinger's interviews on YouTube, you will see that he now talks about this issue openly. Whereas back in the 70s and even in the 1980s, he would never say anything openly about this because in one of his books he writes, when you play with a third actor, you better don't talk about it. And for a long time, he didn't talk about this. So maybe if we look at this from a historical perspective, we can see how this third hidden actor is a very important issue for our world, not to be derailed into a hot war. On the other hand, just let me say a few words about China needing the world to become rich and strong, because this has been on China's agenda for more than 150 years. And China has been coming closer and closer to its final aim to become rich and strong. And I think it is very important to see that everything we see in China today as a major achievement is an achievement that China achieved together with other countries, in collaboration with other countries. This implies, to say things openly, that if we cut collaboration, we can actually hurt this country enormously. And if we want block building, and if we want to exclude the third actor, what we need to do is actually to stop any kind of collaboration with China. China will run into enormous problems if we stop collaboration with China. And the US, of course, knows this very clearly, and that's why the US, as part of its geopolitical strategy, is actually thinking about decoupling and about isolating China as much as possible from the international system. So, for example, in terms of technology, many people look at China and say, oh my gosh, so everything is possible in terms of technology in China. A lot is possible in terms of technology in China, but interestingly, if you look very closely, none of these technological developments, including airspace, including military, everything is the product of a Chinese collaboration with some other country. And that's why China needs the world. And I think this is very important to know, because we don't need to be as afraid as some of us are of China if we understand how much China needs us. Not only do we need China, China also needs us. And I think it is not correct to say that we are dependent on China. As a matter of fact, we are highly entangled, and China is highly entangled with us. And to get this entanglement disrupted will be really, really difficult. So why is it that there are quite a lot of countries outside what we call the West who actually support China's claim that we should resist block building and actually go for a more collaborative approach? We see, for example, that in the UN, the majority of member states do not support the so-called Western sanctions against Russia. But we see also that the majority of member states in the UN have casted their votes against the war of Russia in Ukraine. So it's very interesting to see that the majority of countries in the UN don't take a definite stand, neither on this side or on that side. And this is something we really have to keep in mind, and we shouldn't be too sure about us Westerners being in a dominant position around the world. For example, if you look at India, India is in a military conflict with China. But at the same time, India is one of those countries that actually try to design a new global order. It is one among those countries that, together with China, is actually working on a peace, a suggestion for how to come to a certain stop in the war over Ukraine. So it's very interesting to see that even though there are major conflicts between China and India, India still thinks that it needs China. So why does India think that it needs China? And you see many countries in the Indo-Pacific world that actually sort of talk about strategic autonomy. On the one hand side, they get very, very close to the US and they want to collaborate militarily with the US. On the other hand, they say, we need strategic autonomy in handling China. So why do they need this? And I think it is very interesting to understand this. If you have a two-block system, by not being a major actor in one of the two blocks, you are in a very bad position. because you don't have any bargaining power. You can either go with this bloc or with that bloc. And you have your position in the hierarchy of either this bloc or that bloc. But if you have a third actor, then you can start bargaining on the terms of trade of your participation in this or that situation in this or that bloc, which implies that, referring to the IMF publication, for those countries that are emerging from poverty, for those countries that have already sort of gained a certain level of economic development, if you are a member of an either-or constellation, it is not as good as having a third actor that you can relate to show these other two blocs that there is no absolute necessity to agree to their terms of trade. And I think this is the reason why these countries actually hesitate to support either of the two blocs. And I think it is looked at it from this perspective, it's quite understandable why they would do so. And if you look, for example, at the Cold War situation historically, you will see that there were always a number of countries trying to break out of this bloc situation in order to gain for themselves a better position in a bargaining situation. This implies that if you want China as the biggest among these countries and the most advanced among these countries to develop a third actor position in this overall tendency to break the world into two blocks, then you don't do this because you love China. You don't do this because you want to emulate China's political system. You do this because it is good for you. And it's good for you in a sense that you know that China needs you in order to be successful. And I think this is something we should have in mind, especially as we in the West seem to be a little bit arrogant towards all these funny countries that cannot decide to be either or. And the reason why we tend to be arrogant is because we view ourselves as the winner of the Cold War. And in this very, very delicate and difficult, highly complex situation in which we are in at this moment, we tend to simplify the situation for us and think that the Cold War was actually a situation with less uncertainty, a situation in which we could understand the respective actor more clearly than we do at this moment. And we fall into this habitus of sort of building two blocks in this world because we think we are safe when we do this. And why do we think we are safe? Because we think we are the winners. We think we won the Cold War. But, if you look at the Cold War from an Asian perspective, you don't really know whether it ever ended. And who should be the winner of the Cold War in Asia? Very difficult to answer. So, in order to come to an end, I would like to underline that the situation we are in is a situation in which geopolitics is in command. And unfortunately, we cannot analyze the world in economic terms without looking at the geopolitical constellation. Thank you very much.
Thank you, Susanne. You're absolutely right. We invited you because you would talk from a completely different perspective. Thank you for that. Shaker, it's a challenge, but it's your chance now to respond to the two discussants, and then I'll ask for questions from the audience.
Thanks. I thought those were both really fascinating discussions. I don't really have much to sort of respond to, but let me just say that starting with Susanna, I really enjoyed the kind of historical perspective, especially the idea that there was a three-body problem rather than a two-body problem when you look at the Cold War in historical perspective. And I guess things changed when Nixon went to China. And I mean, to me, one of the interesting questions, and maybe you'll come back to this sort of later in today's discussion, is whether China itself has changed over time. So there is a sense that lots of China watchers have that under Xi Jinping, China is abandoning the kind of development model which was kind of started by Deng Xiaoping and is moving towards a greater brand of political authoritarianism and even economic centralization, which is very different from the more globalist perspective that prevailed earlier. Michael, thanks a lot for your very generous comments. I look forward to reading your paper with Peter Petri. You had talked about FDI. I should flag to you that actually at the IMF, for our next World Economic Outlook, we are going to be looking especially at FDI and doing, the paper I presented today is an umbrella paper rather than analytical work. However, we are doing analytical work on FDI fragmentation. And just to preview some of the results, you mentioned that the stocks are flat, even if the flows are in decline. What we do in that paper is to develop what political scientists call the ideal point distance. So you can go to United Nations voting records and make an ideal point distance between each country pair, depending on how far they are from each other in terms of UN votes. So these are bilateral measures of geopolitical distance, as it were. And you can use that to see how well it correlates with bilateral FDI. And when you do that over time, you find not only does ideal point distance influence bilateral FDI, but the coefficient has been increasing quite dramatically in recent times. So that, if you will, is some preliminary evidence that FDI fragmentation may be taking place. And if you put it in a horse race with other variables like physical distance, you find that not only is the coefficient larger, but it's been increasing more steeply in recent times. So that work will be coming out in April, but there's obviously a lot of interesting ground to cover. Thanks very much to both discussants. Let me stop there.
Thank you, Sheikha. Do you want to get back to this one point, whether China is still China as of 30 years ago?
Yes. Thank you very much for that question. And of course, we cannot speak about China as if China were not a very concrete place. And I've been very skeptical of the development in China under the leadership of Xi Jinping right from the very beginning, when the New York Times was still applauding to this decision by the Communist Party of China to elect Mr. Xi Jinping as its leader. I think the interesting situation is that China is preparing for war. And this implies that, of course, China is also decoupling. China is trying to regain autarky in certain aspects of its economy. And so China is not only sort of being decoupled, it is also decoupling. And I think we can see this very clearly. But at the same time, as I said, China cannot live without the world. Also, Mr. Xi Jinping is realizing that his ideas about Chinese politics have to take China's very delicate international position into account. So, for example, during the 20th Party Congress, he threw out all alternative voices from his cabinet, and some people say now his entourage is his war cabinet. To a certain degree, this is right, because he was trying to convince people that China is in such a dangerous situation at this moment, both internally and externally, that he cannot have any alternative voices around him, because they have to take decisions very, very quickly. And for that reason, everything has to be concentrated on himself, and everybody has to be his best friend in his entourage. But I think he made a really, really big mistake, because China is going to be less stable in the next years to come, because people don't see any hope in this entourage around Mr. Xi Jinping for their divergent interests and hopes. And so they can only take to the streets to actually show their anger and show their their demands. And I think we saw this at the end of the zero COVID policy in China, that people were really eager to take to the streets to voice their discontent in a way that is not normal in China. So, with other words, I think that they are actually trying to convince the people that they need an even more authoritarian regime than they have had for the last few years, because they are preparing for war. And if I say this, and I know that this is, a very, very harsh way of putting this, but I think we have to realize this. It does not mean that China wants to go to war. It does not exclude the possibility that it is going to go to war. And I think this is also something we need to include into our economic considerations. Thank you.
Okay, that was a really frightening answer. Yeah, thank you, Susanne. I would like to ask, okay, I have one online question already coming in. Andreas, if you read it out.
Yeah. Thank you, Birgit. I've got here a question from Isabella Lindner, and she prefers that I would speak it out here. It's particularly to Ms. Weigling-Schieritz. It's, what does your argument mean for Germany, which is a minor major player in the US bloc and whose economy is very much entangled with China?
Okay, let me maybe see, are there other, yeah, I'll collect 3 questions and then, is it also to Professor Weigel, bitte?
Thank you. I have 2 questions, one to Professor Weigling and the other one to the author. The one on China, because you mentioned that China was somehow the one actor that hindered the Cold War to become a hot war. Do you see a role of China now also in the de-escalation of the present war? Because clearly China sees himself in that when the foreign minister talked at the security conference. And my question to Mr. Ayer is, you talked about the dangers to the international monetary system. You did not mention at all. I mean, I'm not an economist, but is the IMF at all considering what the consequences for the international monetary system would be with all this privatization, like cryptocurrencies, private banks that are not banks anymore, but apps and things like that? So thank you if you could go with that.
Okay, let's take another one and then ask. Yeah, Andreas, please.
Yeah, this is now a personal question to Cheka. I mean, you pointed out that a lot of developments were moving away from an international or more cooperative system to a more conflictive or whatever system. But the question I would like to know is whether this might have to do with imperfections in the existing or in the pre-existing system, or so far as it has developed right now. If you think of, for example, disproportional representation of countries in diverse fora, including the IMF, but not only, of course, including also this Paris Club and whatsoever. So there have been a lot of shortcomings in these institutions too. Shouldn't it be, I mean, quite the crisis of this system, shouldn't be.
Thank you. I think, Cheka, you go first and then please, Susanne.
Okay, thanks, Andres. So let me start with you. So I fully agree with you. You know, a lot of the multilateral world order was kind of evolved in the wake of World War II, and it bore the imprint of the victors of World War II. And I think the world has changed considerably since then. So when you look at the representation or, you know, the nature of the dialogue that takes place there is a need for updating the representation. I mean, one very parochial instance of that is what in IMF we call quota reform, because, you know, votes in the IMF are allocated according to the capital share of countries, and that the formula was kind of set back in history when global GDP looked very different from what it does today. So one of the things that the staff of the IMF is pushing for is to have quota reform which more adequately represents the current world as opposed to what the world used to look like some time ago. But, you know, it's difficult. It's something that requires consensus among the existing shareholders. So it's a slow-moving process. But at the very least, we think that this is a process that should move forward rather than backward. And global economic fragmentation seems to be going in the opposite direction, where instead of making progress with reforming the multilateral world order, we just split into regions and blocks which don't trust each other and are hostile to each other. There was another question about, you know, what about the developments in the private sector, things like cryptocurrencies or sort of, you know, what you could call more broadly non-bank finance. Yeah, this is like a huge evolving area. I think it's a very exciting area, but also a very dangerous area because we don't have good data. The regulatory framework is not very well developed. So at least at the IMF, we've been pushing consistently for both of those things to be remedied. So for data to be much better available so we know what's happening in the non-bank sector, and for regulation to be evolved so that, you know, crypto and digital currencies and things like that can be brought under the regulatory system, just as the banking system is. But it's very new, so there's a lot that needs to be done.
Could you please help me and repeat which country was actually the first question about? Germany, okay. Okay, I thought so. I was a little bit hesitant because I thought maybe it's Japan. I didn't hear it. But the situation of Germany and Japan is very similar, actually. Let me start with the de-escalation question. I think much in contrast to what we read in our daily media, China has been trying to de-escalate this war from the first day on. And much in contrast to what we hear from Mr. Blinken, China has been trying desperately not to be aligned with Russia in this war. And this is, of course, very much in line with what I tried to explain, that China actually tries to define a third actor in this overall geopolitical system. And for that reason, China has always, you know, given signals both to Ukraine as well as to Russia that China can be friends with both. And as a matter of fact, I mean, most people in our countries don't know that China has a partnership, a strategic partnership with Ukraine. And China has a treaty with Ukraine, which actually forces China to intervene on behalf of Ukraine in case of a nuclear attack on Ukraine. So you understand why China says, we tell the Russians that they shouldn't use nuclear weapons against Ukraine, because in that situation, China would be forced by its contract to actually support Ukraine and give up this middle position between Ukraine and China, which Ukraine and Russia, which China has been building up for such a long time. So I always said China is going to come up with a peace suggestion only if China knows that it will be successful. And it sounds really strange that Mr. Wang Yi now tells us that this is going to happen on the 24th, because I don't think that the situation looks as if China could be really successful in coming up with this suggestion. But it's also interesting to see that China is sort of trying to line up with a number of countries among those that don't want the bloc building we had just been talking about, and trying to come up with a suggestion that is not China's suggestion, but one that was actually sort of negotiated with a number of countries, including Russia. So we'll have to wait and see. But I think from a Chinese perspective, if China could act as a third actor in moderating the situation between Russia and the Ukraine, that would mean for China that China would raise its level of attention and recognition in the international world as a major global player. And for that reason, they are definitely working into this direction, and I actually expect them to become quite active in this sense. So for a country like Germany, of course, the situation is very, very difficult because obviously our big friend, the USA, is trying to talk us into a situation where we should decouple simultaneously with Russia and with China. And I think for a country like Germany, as well as for a country like Japan, by the way, this would mean that the economy would have to undergo a major restructuring, which I, as a non-economist, think would take many, many bitter years for Germany's economy and Germany's population. And I would hope that Germany actually realizes that for the US to achieve its goal, it needs Europe. And for Europe to be important for the US, Germany needs to be really strong. And on the other hand, for China to be able to resist against the US, it also needs Europe. And it needs Europe with a strong Germany. So it is really interesting to see how Europe and Germany is in this very awkward position at this moment, and they don't really know how to move and in which direction to move. And the reason why they don't know is because they either do not understand that they are so important for both the US and China, or they understand and they are afraid of this. I think both possibilities are realistic, but I'm not close enough to the German elite to tell you which of the two options are the right one. Maybe it's a mixture of both. And I think it is time for us to really understand that Europe is so crucial in this geopolitical situation that we should actually undertake independent action. And I always say that playing the role of a moderator between the US and China with regard to Taiwan would be a wonderful platform for the EU to redefine its position in the international setting.
Thank you, Susanne. Michael, I will ask for whether there is still one question left from the audience, but I also would like to give again the word to you. You were a little bit virtually left out of the discussion. Do you want to come in again, Michael, before I close the overall session?
No, it's fine. I'm enjoying listening to the discussion, and I look forward to the to Dr. Ayer's IMF paper. It sounds very interesting what you're trying to do, but I think that, and I'm sure you've got people working on it that know DFI flows, FDI flows, but the point here I'm trying to make is that it's not just what's crossing the border, it's what's the change in the stocks are. If you've got, the 1980s, for example, if you have the Japanese to get over US imposed barriers, start investing in the United States, and Honda starts making all of its automobiles in the US, and all of these profits and everything are reinvested there. That the reinvestments from year after year after year don't show up in the online DFI flows, but it is a type of economic integration. So I'm wondering if maybe they're doing it, but instead of just looking at annual flows of FDI, maybe to do a first difference of changing in stocks and to see if that makes a difference. Obviously, the numbers are very different, but you probably have people working on it that know a lot more about the details of some of these flows than I do. So I look forward to seeing it.
Thank you. One last question. Bitte, Ernest.
Thank you for this really enlightening and brilliant panel. I notice that one approach of grouping the various interventions is between normative analysis and sort of forecasting or scenario analysis. And the normative analysis, which I would associate with the IMF's paper. I mean, first you analyze and then you propose avenues forward. So you make a normative recommendation. Whereas with your presentation, I sort of had the impression that you analyze the situations, you try to understand what's happening and draw scenarios, some of which were quite bleak. Now, I was wondering how that to bridge these two perspectives, the relevant question is how does one influence the various, how can one influence the various scenarios that you were drawing? And it seems to me that it comes out from this discussion that it's not possible at the economic level, but you need to do it at the political level, at the geopolitical level. And you need to understand the geopolitical interests of the various players in order to then arrive at possibilities to reap the economic benefits from avoiding deglobalization and so on. And the big question that seems to me there is who would be the intermediator in such processes? So the IMF has done a good job over the past 50 years as for, you know, mediating in economic terms. But this is a geopolitical problem. So which is the organization? The IMF is not the right body for that. The UN is too weak, it seems to me, or too inefficient or whatever. So how can such a thing be solved in sort of a prisoner's dilemma? So you need maybe game theory or something like this in order to understand all this. Thank you.
I think it was not a question, it was a wonderful statement of two worlds. I'm sitting in between the two worlds, but do you want to have the last word, Shekhar?
No, I don't have any answer. I mean, one could think of other bodies like the G20 or ASEAN, but I mean, every body has its own weaknesses. So I would actually defer to Susanna to see if she's got some brilliant political suggestions.
Very, very interesting question. I am a very realistic and pragmatic person. Maybe I learned this from trying to decipher China for more than 50 years. And for that reason, I would say we shouldn't start with the big questions. We should start question by question by question, right? So that is, for example, why I just refer to the Taiwan question, which is really, really a very, very important question. I think we shouldn't underestimate this. And when I said, you know, China is preparing for war, of course, it's preparing for war in that region. And, you know, it's very clear that if the Taiwan government is going to declare independence, then China is going to go to war against Taiwan. This is very, very clear. And it's going to be a terrible war. And it's going to be a war in which the US is going to be involved, and it's going to be a war in which we will end up being in a world war. I'm sure about this. So I think, for example, we need to do everything to prevent this from happening. We're not doing anything, right? So one little delegation flying to Taipei, and the next little delegation flying to Taipei, you know. And what's the use of this? It's making things even more complicated. Do we want this? Maybe we should come up with a, you know, jack-in-the-box idea that nobody has thought about to just disturb the situation that is sort of building up in terms of tension at this moment, and find maybe a little bit of a solution for something that can be so enormously dangerous that we really need to find a solution. The same is, of course, true for Ukraine. We cannot just let this war go on and on and on. You know, maybe we should just have someone intervene and say, you know, why don't we do this or that? And I think there is a group of countries trying to intervene and solve this problem. So that's why I'm talking about, you know, solving problems by step by step by step, because then we see countries aligning in order to solve problems. We see how trust is being built up, maybe yes or not, and then we can step by step sort of imagine how this is going to develop. But I think I'm very normative in one sense, and maybe I'm really old-fashioned about this. I was born in the 1950s, and I was raised with the idea that war is not a solution to political problems. And I was born and raised with the idea that we in Europe learned from the Second World War that we don't want war to be our instrument in politics. And I think for Europe to really play a role in international politics is to stick to that principle and to say, you know, we don't want this. Against all players who at this moment obviously think that there is only one way of solving political problems, which is using weapons. I think we should stop this.
Thank you very much. Very clear words at the end. Thank you for everybody participating online or here. And of course, the people here have the advantage that they can still address the authors over a coffee. Thank you. Michael, goodbye to Bologna. Ciao.
Bye-bye.